Hello friends, welcome to my YouTube channel Sachin Education Hub in English. Friends, today we will focus on the topic what are the major issues in corporate financial reporting. Actually, this is a very important question and we will also consider what are the solution for that issues, how to resolve these issues. So without wasting the time, firstly, what are the issues? Sir, what are the issues? Okay. What are the issues? First issue is lack of transparency. Actually, what is transparency? Sir, what is transparency? It means disclosing the sufficient or all the information that are required, that are important on the part of investors to take the decision about that company. Okay. So lack of transparency means companies are not disclosing the full information. Companies are facing the problem or companies are not want to disclose the sufficient information that are important for the point of view of investors. So this is a major issue in financial reporting. Why? Because lack of transparency. If here investors will take not the investors will feel the difficulty in taking the decisions, and if the investors will take difficulty in that company to take a decision about that company, so in simple word, company will not get deposits from that investors, or investor will not invest in that company. So without getting subscription from that investor, without getting any money from that investors, or without getting investment in that company will go wrong, or the company will fail damage in the future, or company will be desolate in future. So whatever the link behind that, in simple word, corporate financial reporting fails major issue because lack of sufficient information in the financial reporting is not good on the part of financial reporting. Okay, so main solution is enhance the transparency. Enhancing the transparency is not possible is on the part of investors or in the part of company. There should be a regulatory body, because they have to focus on that type of things, and if they have to focus on that type of things, company will surely focus on the sufficient information they have skipped to be recorded in that financial information. So if they have a regulatory body, if they have a possibility that someone is overseeing us, or someone is overseeing the company and overseeing the working of the company will surely record all and each and every information for the investors, so it will be easy for the investors to take decisions. So this is a solution and this is the problem behind that, right? So coming to the second problem and solution is inconsistent accounting standard. Actually, the consistency in the accounting standard is lacking today. I am covering the solution as well. If the student is facing the problem, I am also considering that things. I am covering the solution with the problems as well. So please should be focused on each and every line, whatever I want to complete, whatever I want to understand to you. Okay, chali. Okay, now the coming thing is inconsistent accounting standard. Inconsistent accounting standard means make the accounting standard consistent. It is a solution. Okay, but firstly, inconsistent accounting standard means, you can say that, sir, inconsistency means accounting standard patterns are changing daily. Okay, so recording the information in that case, it is very difficult for the investor, or it is very difficult for the company, right? So you can say that consistency is not maintaining in the financial reporting. Without consistency, or the inconsistency is here, will create a problem for the financial reporting, or the major issue in the financial reporting, because the same pattern if not following, or the changing pattern will be following, difficult to understand. Okay, now the solution, sir. What is the solution? If we see the solution, sir, the another solution is adapting, or you can say that adapting the international standard, or you can say that consistency in the consistency in the accounting standard. Sir, consistency in simple word means, if we focus on the inconsistency word, we are considering that changing of the accounting disclosure requirement, or changing in the pattern, or the changing in the presentation requirements, right? So now we have to focus consistency. Consistency means if we have a same pattern, or if we have to record same type of information, we don't have to understand the same things again and again and again. So if there is the same thing or the same presentation or disclosure requirements are here, it will be easy to understand. It will be good for the company to record the information fastly and timely, and the financial reporting will be complete as well in the time. So this is the solution as well. Okay, and problem and solution is complete for the second purpose, right? Now the third one is limited disclosure requirement. Limited disclosure requirement, what it actually means, it doesn't on the part of company, it not on the part of company, actually the SEBI. What means SEBI? Security Exchange Board of India not required full information. They are not focusing on that type of thing. They are focusing on the limited disclosures. They are focusing on the limited type of information. They are not focusing that whatever the main things are important on the part of companies to be recorded in the financial reporting, they don't want to do. They are just focusing the limited disclosures. They are just focusing that the information should be sufficient, information should be normal, which means incomplete information is here on the part of companies. They are not disclosing the full information while giving the report to the SEBI. So you can say that on the part of SEBI, there is a limited disclosure requirement. Because of limited disclosure requirement, some columns in the financial reporting are not filled. And if these columns are not filled, what is the requirement of that columns? So you can say that if these columns are not fulfilled, it is a major issue on the part of financial reporting, because these are the whether these are not important columns, or you can say that companies are not understanding about these columns, or there is a limited disclosure requirement. If we are not fulfilling each and every statement, it means it will be on the part of financial statement, or it will be problem on the part of this statement that it is not disclosing the full information, or it will be difficult to understand this statement. So in very simple word, you can say that there is a limited disclosure requirement on the part of SEBI. SEBI is not requiring the full information, which creates incomplete information on the part of company to be disclosed. It is not good. It is not good right now. Okay. So what will be the solution, sir? Disclose the full information. Okay. Coming to the solution, sir, strengthen the disclosure requirement. Strengthen. Okay. What will be the word strengthen? It means to say that provide the full and accurate information whether the SEBI is needed or not. SEBI is required limited information, but actually on the part of company it will be okay. Should have to be on the part of company, because financial reporting is required these columns. If the SEBI want limited information, it doesn't mean that the limited information should be in the financial report. I know very well something is important, it is only on the part of the basis of time. But if we want to disclose all the information, it will be not only help the SEBI to understand about your company, or it will also help the investors to understand about your company. So should be focus on disclosures requirement, or strengthen the disclosure requirement. That should be important on the part of investors, or that should be important on the point of view of company, because understanding the company very well on the part of investors or the stakeholders to invest in that company, it will give the better growth or goodwill on the part of that company, or you can say that it will be give better returns to the company and investors as well. Okay, coming to the another problem is poor quality of audit. You can say that poor quality of audit is the problem behind that, because actually the quality of audit is not good because of reason is lack of expertise in that. Lack of expertise. Okay, because the students are not focusing on what is actually the financial reporting is. They are not seeing the financial reporting. They are not actually understanding the word financial reporting. They are not seeing the financial reporting, what is it. So you can say that whatever the disclosure requirement is in the financial reporting, how they can understand, and after the studying they go to that practical work. And this is the major reason they are not understanding what is this in this case. Okay, what is in the financial reporting. They are not disclosing, and they are giving the full they are giving the inaccurate information, or they are not giving the full information. So this will create a problem for the audit as well. Or you can say that there is there is a lack of quality in the audit, or the poor quality of audit is here. So what is the solution? Now this is a problem. What is the solution, sir? Solution is the quality of audit. Poor quality of audit means best quality of audit. How this is possible, sir? Make the student trained. It means should we have a training program, practical training problems, or you can say that practical training programs for the younger ones regarding these disclosure requirement, regarding the understanding of the company and whatever the requirements about the company. They should have a training program, and they should have a practically training program courses for the students to understand these concepts, so that after understanding these concepts, they will whenever go to hiring in that company, they will understand what is in that company, and understand very easily what is the main purpose in that financial reporting have to be disclosed about that company. Okay, this is the solution and the problem. Now the another one is lack of enforcement, fraudulent practices, lack of standardization, complexity of tax laws, limited use of technology, and limited capacity of regulatory body. Somehow we are knowing about some of the other solutions, some of the other problems, right? But we are focusing the main issues, that is fraudulent. Okay. Main. Wait here. Fraudulent is the main issue in the financial reporting. Why? Because if we understand very clearly about the financial reporting, especially the management who are understanding the financial reporting very clearly, they want to take benefit from that things, because they are knowing that company is not understanding, or that they have a sole responsibility about the financial reporting. So they are taking the benefit of that thing. And after taking the benefit of that thing, it will harsh the company, or it will damage the company as well, or it will also damage the interest of the investors as well to invest in that company, because they are knowing that this is a type of fraud. So whatever the fraud practices are in today's world or in financial reporting, also make the financial reporting ineffective. Effective financial reporting is not possible if there is a fraud, or the management is taking the fraud or making the fraud, or you can say that investors' interest whenever harmed, your company will not grow. So the fraudulent practices within the financial reporting should have to be solved. How it should be solved? We have to combat the fraudulent practices. How this is possible to combat the financial fraudulent practices? It will be only possible when the regulatory bodies are taking the strict action against that. If the regulatory bodies are focused on or overseeing the working of the companies on the daily basis, not on the daily basis, on the regular basis, so you can say that it will be on the mind of management that they have not have to take the benefit from anything, because regulatory body are here to see that things again and again. In very simple word, if the regulatory body, sometimes if the management do any type of fraud and regulatory body takes a strict action against that, and very strict action against this fraud, will also cause an effect on the other peoples to do that type of fraud, and it will automatically affect on that mind, will surely reduce this type of problem, because the strict action surely impact on the mind of other people, and other people don't do that type of fraud on the future basis. Or you can say that financial reporting will be effective, because if we take a strict action in making the financial reporting and reduce this type of frauds, and take a strict action regarding if the fraud will be happen, then it will be surely reduce these type of fraud in the future. Okay, so automatically the financial reporting will be effective. Coming to the another problem, first of all, that is complexity of the tax law, because today income tax, income taxes have a lot of provisions. We have to understand the types of provision, and actually income tax also focus on the financial reporting. So whatever the tax laws are here, it will be create a complexity. And in that complexity, what is this? What is the problem? Financial reporting is not fulfilling the all disclosure requirement that the tax laws are wanting, right? Tax law, whatever the information they want, this is also not this is not the information that is disclosing in the financial reporting. This is not the on the part of company, that tax laws are very complex. How they understand tax laws, whatever the requirement they want in financial reporting, whatever the requirements SEBI wants in the financial reporting, whatever the requirement that actually company act required in that financial reporting. So all these type of regulatory bodies create a problem in making the financial reporting effective. So this is a major reason also. So sir, what is the major solution regarding in this case? Simplify the tax laws, sir. Okay, simplify. How to simplify, sir? This is on the part of government, not in our hand. This is part on the government. If the government will want, then surely they will simplify the tax law. And after simplifying the tax laws, you can say that financial reporting will be also easy, because we don't have to disclose each and every type of information. That is just a wastage of time. Seriously, I am telling. Okay. Coming to the another one is limited use of technology and the limited capacity of regulatory body. Actually, I am just focusing on the limited capacity of the regulatory body, because the technology, as you know very well, because of the lack of technology, financial reporting is also facing a lot of issues, because the new technologies, new software have to be understand. So it will be create a problem to make the financial reporting for the younger ones to understand firstly on that software and how this software works, and thereafter they will have to be focused how to prepare the financial reporting. Okay. So firstly, we have to take a training on that type of softwares. Firstly, we have to understand what is the technology in that case, and thereafter we will focus on this financial reporting preparation. In simple word, technology should be here, but we have to make a training programs regarding the understanding of these technologies. Thereafter, we will feel easy in making the financial reporting. Okay. Coming to the last one is capacity of the regulatory body is very limited, because the regulatory bodies are not completely focused on the financial reporting. They are not overseeing actually what the financial reporting actually wants to show, wants to be complete. In simple word, company are not disclosing the full information, right? If the company is not disclosing the full information, tell me, is the regulatory body not saying that type of information? Or you can say that if there is a lack of information, is the regulatory body are not aware about that? Yes, they are not aware about that. Why? Because they are not overseeing the they are not overseeing the working of companies again and again. Because of that purpose, company are feel free because the regulatory bodies are not here. Companies are feel free to not disclose each and every type of information in a daily basis. They are thinking that there is no one in the overseeing body. We are here. Whatever we want to see, we will not. It will not matter if we not disclosing the important information in the financial reporting. It will not important, right? So company will be feel free. This will also cause a major problem on the part of financial reporting, because if the regulatory bodies are not focusing on the timely basis, company feel free, and it will also have a chance for the management to make a fraud. So it will be the major issue. So sir, how will we solve that solution? This will be the major solving is strengthen the regulatory body. Okay, strengthen. Sir, this is a major word, but we don't have we are not understanding this word strengthen. How to strengthen the regulatory body? Actually, the strengthen the regulatory body means overseeing on a daily basis. Regulatory bodies are should be for the each and every type of working of the company. Actually, companies is focusing that how they can take a benefit, or the management is always in thinking that how they can get a benefit, or how they can do a fraud. So if the regulatory bodies are here, or if I simply said that if the regulatory bodies are not focusing on the daily basis, no matter if they are taking the strict action regarding that in legal work, automatically it will also affect the company. So you can say that not only the overseeing is possible, regulatory body should be have to hear the strict action. So if the strict action will be taken by the regulatory body, automatically reduce the problems in the financial reporting, automatically reduce. But there should be a overseeing. If the overseeing on a regular basis make the financial reporting more effective, instead of overseeing, if the regulatory bodies are not here for the overseeing, there should be a strict action, because it will also impact the company to make the financial reporting fulfill clearly and effective. This is all about the major issues and their solutions. I hope you will all understand about this question, and this is a very major and important question on the part of you can say that exam. So this is all about the long question and the very important question for the exam. And very importantly, students, this is the notes in our book, and this is a note that we have also shared with you in our Telegram channel. So if anyone want to take these notes, then the link is in our description box. This is all about today. Thank you friends. Please like, share and subscribe our video. This is very important for us to grow and help to you. Okay, thank you so much. Have a nice day.